Hey everybody, here we are. The big show is about to happen. I am with my special guest. He is a part of two major companies. He is part of a law firm as well as an accounting company, right? And he is also part of a self-directed retirement account company. So he's got major stakes in all of those companies. He's got 4 books out, some of them bestsellers, and they will absolutely change your life. I actually have all 4 books, and they are great books. He is one of the top legal and tax experts across the country in the nation, and he helps small businesses do better. So this is the best guest I could have in terms of this topic. Now, people don't find taxes sexy, but Mark, he makes it happen. So please help me welcome my guest, Mr. Mark J. Kohler. Mark, welcome to the Home Zone. How are you doing?
Thank you so much for having me, Hone. I appreciate it. So excited to be here. So this is really cool. Man, so much to talk about, and I apologize for being here in the home office. I was hoping to get to the studio. It's just been wild and crazy trying to keep up with everything on the stimulus act. And we're not going to talk about that, everybody. This is going to be all about 2020, structure, saving taxes, getting back on your game as the world starts to reopen. So
yes,
crazy time.
I mean, we can talk a little bit about it, but that's going to change. And I want people to be forward facing. I want people to be excited about what they're going to be doing in 2021, 2022, 2023. The Stimulus Act, the CARES Act, all of that, that's going to be gone. But what we're going to have is we're going to create all kinds of businesses while we are in this lockdown. I think amazing businesses are going to come out of this. What do you think, Mark? What do you think about what's happening?
Yes, any of you entrepreneurs out there, you've been going crazy because you've been sitting at home thinking of ideas to launch, building your strategic plan for 2020, reevaluating your current business, maybe modifying it. And I want to encourage you to not feel like you're a failure. It's easy to take it personal and go, man, my business got torpedoed, or it's a wipeout or whatever, and I have to start over. We've all been blindsided by something outside of our control. And it doesn't mean you're a failure as an entrepreneur. I think a great entrepreneur is one that can redefine themselves, find a new product line, a new service line, a new source of revenue. And maybe we've learned from this and we're going to do a better job of having multiple sources of income and being ready for the next time it happens. So I think lots of good stuff are going to happen, I think.
Right. Now, you're someone who has multiple businesses and you've created a nationwide business. For those who don't yet have a business but want to have a business, from an entrepreneurial standpoint, not your legal hat, not your C.P.A. hat, what entrepreneurial tips do you have for those people who are in lockdown who don't yet have a business, that maybe are like, you know what, this 9-to-5 thing, it wasn't as safe and secure as I thought it was going to be, and this might be my time. This might be my blessing in disguise. What can I do? How can I start my business? What tips as an entrepreneur do you have for that?
You bet. And in fact, I'll just say it now. I have a workbook that's been out for 1.5 years now. It's on Amazon. It's done very well. It's got like 60 little videos and webinars and podcasts and a business plan and a strat plan. And it's a workbook you go through these 8 steps to either make your current business better or to start a business. And each step has an 1.5 hour live, small community, Main Street, live Q&A, workshop, townhouse meeting, if you will, to teach each one of those 8. So this is a huge topic. In step 1, what I talk about is just understanding that we don't have to quit our day job to have a small business on the side. In fact, we've all learned here, like you just said, Hone, that maybe having another source of revenue or a couple sources of revenue isn't a bad idea. Some people think business or a small business is risky. I think it's too risky not to have one. Let's have that other little small business. It allows me to save taxes. It allows us to maybe do something fun that we make money at. Why not turn your hobby or what you enjoy doing into a business? Some people say, why ruin a good hobby by making money at it? I get it, but let's be thinking outside the box. And step 1 is really just finding, what am I passionate about? What's going to get you up every morning to do at night when you get home? If you're like, oh, I don't want to do this. Well, then that's not a good business. Let's do something we love and are passionate about. And then it's going to create extra sources of income, wealth, and tax savings. So just don't give up. Just keep brainstorming.
Gotcha. And you were saying this is a workbook that you can get from Amazon? Can you get it from your website?
Yeah. In fact, I'm going to share my screen off and on here a little bit. Is that acceptable? I've got some good stuff to show here. And Okay, so let's see if this comes right up and yada yada. And
If
here
you
we
do
go.
share your screen, you would be the first to share your screen. I haven't had anybody share their screen on the Hone Zone yet, so let's see if
Okay.
this works.
All right. So let's. Are you seeing anything good yet?
I'm not seeing anything. Let's see.
Okay, I've got it almost here. Let's get this going. This is good stuff. And in fact, I've got a lot of slides that are going to be really helpful to a lot of you. So hang tight. Okay, I've got to just do this little stream thing, it looks like. Well, looks like the screen. I've got to go to privacy and security. Okay, I'm almost there. Thank you so much, everybody. So let me say this. Yes, that book is called 8 Steps to Start or Grow Your Business. And it's out on Amazon. It's at my website, and you can check into it. This is not an infomercial, everybody. I want to be giving you practical steps and strategies that you can be doing immediately. So I think that's an important one that you'll be able to use in the future. So, all right. Okay, so where do you want me to start? I've got some great ideas. What are some of your thoughts, Hone?
Well, let's see. Let's talk about first. Let's talk a little bit about the stimulus plan. You can take $100,000 out of your 401k right now, right? So, I mean, that could be a great starting point. But you also have your own opinions about that $100,000, whether you should or shouldn't take it and things like that. I just want people to have an understanding of what options are available. So if they are interested in starting their own business, what kind of funds are available to them, how they can go about it, how to bootstrap, maybe just all of those things. Like, so from an entrepreneurial standpoint, how do you feel about all of that?
Well, boy, retirement, there's under the Stimulus Act, there are several ways you can better access your retirement account. Now, I want to say this, how I'm going to talk about 3 major ways. The first one is you can just take a distribution for up to 100 grand. Right. You can pay the tax over 3 years and you can put it back. Fine. I do not like that. Number 2, you can even borrow from your 401k, pay interest back to yourself, and take a tax write-off if you use that loan to work your business. That's great, but I'm not thrilled about that either. The reason why I don't like 1 and 2 is because your retirement account is sacred money. We want to build that and grow it. And I'm a huge Dave Ramsey fan of building wealth for the future. And I'm constantly trying to help clients get money into the retirement account. Now the government said, oh, if you're struggling, just go pull it out. I'm like, whoa, that's not really the best thing to do, is to go drain your retirement account. So one of the principles we teach, and Hone, you know this, is the third option, which has always been around, is to self-direct your retirement account. Right. If you want to go make some money in your retirement account, go make some money in your retirement account. Worry about your personal life with a part-time job, a full-time job, a small business, sell online. And you've got to get these 2 worlds going. Your retirement account is investing and you're investing in building wealth. That's the most ideal, if possible. Yeah. We got to be really careful.
Right. And I was talking to Matt, and we were talking about taking the distribution of the 100,000 from the job that you have and then rolling it into a Roth IRA and pay the taxes on it. So then you have both vehicles. You have your 401k, which you couldn't touch before. Now you're taking your distribution from it and then rolling it into a Roth IRA that's self-directed and then doing business out of that. So both are growing. One's attached to the stock market and the other one's self-directed.
Yeah, those are both great ideas. In fact, Matt and I we just had our summit a week and a half ago, a day and a half of classes and work breakout sessions and all things on how to self-direct. And so this is a huge topic. We can spend the rest of the time on this, and I'm glad you've at least touched on it. That little workshop is $99 over at our website, and you can go to let me give a website to go do more research on this. It's SDIRA handbook.com. So that's self-directed SDIRA handbook.com. Matt's got the best-selling book in the country on this. He's my law partner. He's wonderful. And then we held our summit again a week and a half ago for a day and a half, and it was just awesome. And you can watch the full recording to hear all the questions. It was almost 9 hours of content. So check that out if we've wet your whistle with that. But using your retirement account wisely is a huge topic. Just love it.
Yeah. Now, my group was talking about taxes yesterday, and they were like, "Oh, save that question for Mark tomorrow." The question is,
Okay.
if you take the distribution of the $100,000, is your tax bracket going to be where it's are you going to be bumped up to the next tax bracket when, like, as $100,000 more income touches your bank account, or is
Okay.
because it's spread over 3 years? How do you think they're going to be tracking that?
Okay. So if you take a distribution of 100 grand, you have the choice of how you want to report that on your tax return. You could report 0 this year, pay no tax this year, and then you got 2 more years to claim 50 grand each year, or 100 grand on the last day of the 3rd year. You're allowed to claim that 100 grand whenever you're ready, and that's when your income's going to go up by 100 grand.
Um,
So I'm not thrilled with that because, again, you've just tapped into your retirement account and depleted it. So now if some of you say, well, I need that 100 grand and I know I can put it back in a year. Okay, sell me on it, because I'm here to be your helper and watchdog.
right.
So if you think you can put that 100 grand in a year, there's no tax. Use it for a year, put it back. You're good to go. So that's the flexibility here, but you gotta be careful with that strategy. I like the self-directing far, far more.
Okay. All right. So now, if somebody's at their W-2 job, they don't have a business going yet. Is that there? Are there any tax, I guess, strategies for a W-2 person? For those who are watching who don't know much, I'm constantly talking about tax-free wealth and saving on taxes and things like that.
Okay.
A lot of W-2 people are watching this.
Oh, great. Okay. So here's an important point. When I go speak at a conference or I go anywhere and someone says, Mark, I want to save more taxes. In fact, yesterday I had a phone call with a Verizon executive that does very well, W-2. He's like, Mark, I want to save taxes. I said, well, you're keeping your day job, right? Yep, it's a great job. I don't want him to quit. Well, I said, let's make sure we start to exploit more of your real estate on the side, which he does have. He's got some rental properties. So let's build up those rental properties, which will create tax-free income. And down the road, we'll be able to live off more of that real estate wealth at a lower taxable rate. I may not be able to save you taxes today. Now, there are methods to do that. If you're married, if you have some real estate professional type stuff going on, maybe you're fixing and flipping and watching, Fixer Upper with Chip and Joanna, and you're having fun with that, that's cool. But if you're, so real estate is the first option in that way as a W-2 wage earner to save some taxes, because I want to create more income either at your same tax rate or a little lower rate. Number 2 is having that small business on the side that creates more income, and we can now generate a lot more write-offs. And all of a sudden you're making $1,000 a month tax-free. So your income went up, but your taxes didn't. And that in of itself reduces your effective tax rate because you've got more income, same taxes. That means I went from a 20% rate down to 18%. So that's part of my goal too. And the third thing is I want my corporate employees, like many of you, to have a long-term vision of, okay, what's my plan 5, 10, 15 years from now? Are you putting all your eggs in your basket at work? I don't think that's smart. Let's be working some of these little side businesses so that if we don't save a bunch of taxes today, maybe we can save more in 3 years, 5 years, or 10 years. And so a good tax advisor is really trying to push that income out and creating more wealth with lower taxes in the future as well.
Right. Do you think if somebody created a small business on the side and they have a W-2, that by allocating some of the, as you call it, above the line expenses, or I'm sorry, below the line expenses, if you can put them above the line now, so maybe some of their home office, maybe some of their cell phone, maybe things like that, and then now they can push off things that they would pay with after-tax dollars from their W-2, they just write it off on their small business.
Yep, absolutely. And I'm just going to go to a yellow pad here. Are you able to see my screen now, or
I can
just
let me add that. Let me see. Okay.
You might be able to see my screen. It looks maybe good. Let me see. Do you see this PowerPoint with some books? Do you see that PowerPoint?
Yes, I do.
Oh, that's good. Okay, if I make it a little larger, is that even better? So everybody
even
out there
better.
can see. Okay, so these are my books that I had out there. That's what I was trying to show back at the beginning. So don't stress about it. This is not an infomercial. This is just where you can get more information and live with it. Now, let me see where I wanted to go next. I'll do this. Let me show a couple slides here to give you guys more resources as I answer that next question. So here's our law firm and accounting firm and our main phone number if you want to set up possibly a consultation with any of us. That's cool. But here's a lot of free study and motivation. We have our weekly podcast. We have a weekly newsletter. I do a weekly live Facebook and YouTube, which will be tomorrow, Thursday at 4 o'clock Mountain. 1 second here. Someone's out there cleaning in the front area. I want to make sure there's no background noise. I've got a YouTube channel with a bunch of videos that are free. And I love the Success Hotline. If you've never called this, it's pretty funny. It's a professor that for 20 years, he's been sharing a 2 to 3 minute tip daily to motivate you. And I send it to my kids all the time and friends. Just listen to it. Try it once. It's only 2 to 3 minutes. Kind of fun. Now, so back to your key question here of this structure and where we're going. Let me throw this out, Han, because I think this will be really, really helpful for everybody. This is my basic structure for all my clients, the trifecta. Now I know, Hone, you've seen this before, but this is really, really important. I want my clients, whether single or married, to have a family trust at the bottom that's going to own their home, investment accounts, and life insurance. And this trust can be changed by you anytime during your life. Once you do it, it should last the rest of your lifetime, unless you've got some crazy problems with kids or you get divorced. Maybe we'll have to kind of update that, but very, very straightforward. And then, something went, let's see. Can you still see my screen?
Yes, I can still see your screen. It just did something crazy.
There we go. Oh, my word. Let's stop. I'm going to share screen one more time and see if we can get this rolling. I tried to hide a little something in it so I could see myself better. Now we're back. Okay, now hang tight, everybody. So now we're rocking, right?
Yes.
Okay, so then what I'd like to do is see my clients have their rental properties off to the side and their operations off to the left. And this is just a starting point. Then we can build upon this. And these are just some slides I had from a recent workshop I did. And I want to show you some that really start to expand on this. You're going to love this, Hone. So here's another example. Oh, go ahead.
For the viewers, the separation between the two circles, one is active income, one is passive income. Passive income being rental properties, holding notes, things like that. And then your active income are like if you were selling jeans or if you were cutting hair or anything like that. If you had active income activities, ordinary income, like a job.
Yes,
kind of
absolutely. And I'm going to go, I'm going to zoom in here a little bit more so that you guys can see this as I modify it. And when I work with a client on the phone or on a webcam, what we try to do is build a diagram just for them. So everybody can see this right now. And so I'm going to just have fun with this for a minute. So we call this our typical client, if you will. And off to the side, if they're married or single, we might have this W-2 job. So this is, we'll just put this off to the side, W-2. And this is going to flow into your basic income down at the bottom. Now, as we do this, this is really powerful, Hone. You're going to love this. Is we've got this side income, I should say, or the day job that gives us stability. It gives us maybe benefits and things like that. And then many of you, I'm not saying you have to have an S corporation right off the bat. Many of you may just start off with a little sole proprietorship or an LLC. And this little entity may be something that you're doing, not always real estate related. I don't want everybody to think I'm all about real estate, but you may have an online business. You might be doing some services, some consulting. So this could be all sorts of ordinary income, like Hone said. Now this is going to give us a chance to write off a lot of expenses and create extra income and tax savings. So we want to have this other side business building itself and growing until we're ready to turn it into an S-Corp. And there's no rush. We can evolve into this S-Corp when the time is right. So it's just out here. It doesn't have to be a big operation. And we're just kind of building this little thing off to the side. And any extra income will flow. Sorry, got to kill this call here. All right, sorry. Now, the other thing is, I like what Hone said, is this is the passive side of income. This is where we're going to be building wealth off to the side. And Hone, I'll shut up here in 2 seconds. I just want to get this out here because I know you love this. And this is so powerful. And when I meet with any client, this is the type of situation we're trying to do. Is we're trying to create that ordinary income on the right, passive income on the right, and ordinary income over here. And so, but we don't have to do it overnight.
Yeah. Real quick, bottom right-hand corner, you can slide the little dot, bottom right-hand corner all the way down, 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 further down. Oh, to the right, to the right, to the right, to the right.
Okay.
A little bit more.
Oh, this?
Yeah, drag it over to the right. There we go. Now we're cooking with fire.
Ah, I like it. I didn't even know you could do that. And I use PowerPoint every day. I love that little thing. Thank you so much. I learned something new every day. Life is great. I was trying to do it up here in view, increasing the percentage, but you just freaking made life a lot easier for me. Okay, so one other thing, I'm just gonna leave this alone, and you may have questions from your viewers or whatever, is we might have a 401k from an old job, a current job, we may be building it in our business, but a lot of times I wanna be also building up these little Roth IRAs. And these little Roth IRAs are gonna be for you and your family, and we want these to be growing, sometimes self-directed, or in different formats, and we want to be saving using Robinhood and Acorns and whatever we're doing. We've got real estate possibly, but this is kind of the trifecta of what we like to use to really help our clients build that wealth and really get it growing. Okay, Hone, what do you think? I want to just get that out there.
All right, so let me see how I can dissect this for the viewers, but I wanted to point out a couple of things. So your sole proprietorship, what you're saying is with a sole proprietorship or an LLC, it's just your basic starting point to create a business, an income of sorts. Like you were saying, you can do consulting, you can do some kind of sales, you can do whatever you want, and it doesn't have to be really overdone structurally. You can just begin business, just start making money. And then with that money, is that money from the sole prop LLC funneling into the Family Renewable Living Trust or revocable living
in
trust?
a sense, yeah, let's put this right here. What really is going on down here is this is your trust or your 1040 or your personal tax return. We're not going to get a different bank account for a trust. And so we'll put down here our little, this is our little 1040 tax return, and this sole prop, and I just kind of put this in red. Let's do that. This is kind of the start. This is the gateway drug. You know, just trying to get out there and make a little income, doing what you love, and this little beginning will evolve and will convert it when you start to make more money. Right.
So then you're going to convert the LLC as sole prop, that little entity that you created. Once it starts getting some traction, and we like to say around $40,000 of net income will be the sweet spot to transfer it into an SCorp. And within the SCorp, you have to pay yourself a salary. So I see the little salary arrow coming off of there. You pay yourself a salary, and that salary then can be used to create things like 401ks and stuff like that for yourself, so that you can start doing tax saving strategies like that using a retirement account.
Yes. Now let me throw this out before you go further on that topic. Now everybody, you're like, why are you on this? Okay, everybody, slow down. I know I'm throwing a lot at you in 1 hour. I've got 1, 2-day classes, 5 books. I mean, there's a lot here. So hopefully what we're doing is just kind of giving you some background of some ways you can go. And this is so important. If some of you are like, well, my CPA doesn't talk like this, or I've never talked to my attorney, or Mark Kohler's going to sell me a boot camp in Vegas. No, and I'm not selling you entities for $5,000. No, some of you don't even need all of these bubbles. I'm trying to show you where things can go. And if we just start out with something on the side, or a little rental property on the side, and we get our trust in order with our spouse, or we're single, and who's going to get what, this is the beginning, and we can start building it carefully. So I don't want to overwhelm anyone.
Got it. I love that. Okay, so this picture that we're all looking at, like there's a bunch of viewers on here, we're all looking at this. This is what your business gets to evolve into. But it doesn't start there. It starts with the little W-2 job that you have right there, and it starts with you starting a sole prop, which stands for sole proprietorship, or LLC, and just starting your business that way. And then you can create other LLCs, and then you might graduate to the SCorp, and you can do all of those things. But right now, this is what we want to take a look at. I want to talk about that the thing that I think is throwing off some people is that middle part, that family living trust, that family.
Okay.
So please explain what that is right there.
Okay. I'm going to call this the RLT, Revocable Living Trust, RLT, and a better word for it is estate plan.
Okay.
This is going to be your will, powers of attorney, pull the plug if I'm a vegetable. There's going to be this trust that avoids lawyers, avoids court, and says where all your stuff's going to go. And I know many of you are young. You're in your 20s. You're getting going, and you're like, I don't need to worry about a will or trust. Have you heard about COVID-19? Who knows if you get blindsided by a truck or you this or that? Who knows? And you're working so hard to build your wealth. I'm not saying you have to go out and set up a trust tomorrow, but I'm saying let's think about this when you get married. Some of you watching are married. Some of you have kids. Okay, now where's all my work going to go? Do I want to leave it to charity? Do I want to leave it to my brother or my sister? And so the trust can also create what I like is privacy. So this is another little slide from this presentation I did. This was a workshop I did in Orange County. You can get it on my website again. This was a full day workshop, about 10 hours. But this was a slide where I talked about a trust can provide a lot of privacy and anonymity. See, we use these LLCs and corporations for protection, but the trust can be privacy. We have mail forwarding services for a couple $100 for up to 3 companies or people. We have digital mail forward where you can just go online and look at your mail for the day. No one knows where you live. Many times we can structure your business where people don't even know you own it. And that's where trust and a little more advanced planning comes into play. So that's kind of one of the purposes of the estate plan, is for the future, for your family, for your beneficiaries, and for privacy.
Right. So I love that you brought up asset protection versus privacy, because a lot of people get confused and they think the trust offers asset protection when it doesn't actually offer any asset protection. It's just for privacy. But they'll confuse the two, and they'll say things like, oh, I'm going to buy my property in a trust, and that's how I'm going to have asset protection, because they're not going to be able to find me, so they can't sue me. And that's just not true. That's
right. And what's interesting too is, as we go back to our diagram that we were just throwing out there, let me find our little typical client that we were building, and it is, I'm just scrolling down here. Okay, boom, there it is. Oh, this is Roth IRAs for all the family. So
and we got a question. We got a question, Mark. It says, who holds the trust? Is it only done by an attorney, or does it just need to be notarized? Speaking about the trust.
Well, you can go onto some websites and design your own trust. I don't recommend it. Now, if you would need a will, 50% of Americans don't even have a will. And that's where I give all of you homework doing. You can do that yourself, get it witnessed by 2 people, and get it notarized. That's going to comply with almost all 50 states. And just write down, if I die tomorrow, here's who gets my kids, and here's where this goes and that goes. That's a will. The trust is going to be a 30 to 40 page document that's a lot more involved. And it's going to lay out distributing money over time, where do assets and real estate go, you're the trustee, and all this stuff. So, boy, it's a big question, but the estate plan doesn't have to file a tax return. The trust doesn't have to have a tax ID number. It's yours. And while you're alive, married or single, you can change it. Once you die, it's irrevocable. And then if your whoever you name as your trustee just carries out the wishes with no court, no lawyers, and no estate tax. It flows the way you want it.
Got it. So that's definitely a much deeper conversation. I do know the answer you're trying to get to, but I know it is a longer conversation than that. So
yeah. And so let me throw out another thought here too. On this side, many people ask, well, Mark, I'm going to have 5 or 10 properties. Does that mean I just set up an LLC every time I buy a new property? The answer is no. And remember, one little sheet of paper on LegalZoom is not a frickin' LLC. You need to have an operating agreement, a board of advisors, minutes. I want you doing minutes every year. You should have a tax ID number, a bank account. There's all these little things that make your LLC legit. And I know some of you are freaking out right now, maybe you're just disagreeing with me going, all I have to have is one piece of paper. You know what? Good luck in court. I've been there. I've been trying to help clients get out of problems, and their little sheet of paper, I have an LLC, the plaintiff blows right through it because you didn't respect the veil. Now, it doesn't again mean we have to have an LLC for every property, But if we expand that little picture over here, let's see if we can blow it up with this. See, that's that little square. I might have 3 or 4 or 5 properties in 3 states. I have 1 LLC, fine. Maybe I do have a separate LLC for each state or multiple properties in 1 state. Then I could evolve into a series LLC where I have little sub-series. They're allowed in about 15 states now. Then I can get even more asset protection as you graduate and set up this Utah or Wyoming holding company to own all your LLCs. And I know some of you are in California and you're like, this is $800 an entity. I get it. We want to find a right balance for you. But just doing a sheet of paper or a trust or nothing at all. Oh, I'm going to get umbrella insurance. I'm okay. Good luck with that too. And I've done podcast after podcast talking about how less than 1% of umbrella policies ever pay out. They're not built to just let you go and avoid all good asset protection. But anyway, Hone, these are these 4 steps. You go from 1 to 2 to 3 to 4. There's no tax ramifications, and it lets us start out right here, basics for people, and then graduate up.
Got it. So we have a comment from Jin. He says, I'm just starting out with 1 rental property and my CPA started an SCorp. Should I switch back to the LLC? Sole prop? Yeah, that was the same reaction that I had when I read the question, because sorry, Jin, your CPA shouldn't have had the SCorp own the rental property. It should be owned in your LLC.
Yeah, it is. That is not a good idea. We want to use SCorps to never, ever own assets. Jen, if I was on a phone call with you, I would be asking, when did they set up the entity? Was it LLC taxed as an SCorp? I like that because I can remove the S election very easily from $100 or so, and we don't have to start over. Has the title been transferred to this entity yet? What state is it in? What other businesses do you have going on? But I'll tell you right now, that's almost malpractice. It would create a real problem down the road. You never, ever put rentals in an SCorp. You just don't. It's just, that's basic CPA work 101. Moreover, people, this is important. CPAs should not be setting up entities. It's legal work. And all of you shouldn't be setting up your own entity because you're like, oh, I can go click on a mouse and go to LegalZoom and get it done. Yeah, what the hell are you doing? Do you know? Well, no, I'm just going to figure it out online. Do you know I have 2 full-time employees called fixmylegalzoomentity.com? Because people call up and go, I don't know why I set this up here in Wyoming or California or wherever. And so we have to unravel it and fix it. Just do it right from the start. We set up entities for $800 and you get an hour with a tax attorney designing your diagram. Now that you don't have to use us, but don't do it yourself and don't use an accountant to do legal work.
Right. Newbie 101, LegalZoom and TurboTax.
Yeah, they could be good for you if you're doing basic things or you've been around the block and you understand all the ins and outs. But the first time you're setting up an entity or getting started, not a good idea.
Right. So we have a question from Lenny. If you get the time, can you go over charitable remainder trusts?
Oh man, oh my gosh.
I know that's a big one. Lenny's one of your fans, Mark. So he's a big fan of yours. He's a student of yours. He consumes your content a ton. So he's a fan.
Let me throw this out. I think I'm going to just do this for everybody. I'm just running over to YouTube. I think I have a Kohler charitable trust video, the power of the charitable remainder trust. Almost 5,000 views, not bad. 7-8 minutes. I'd recommend watching this one. And I also have this other one with 10K views, how to set up your own charity. Check those out. These are really 2 good videos on that topic, Lenny. It's just not everybody's going to be in the mood for that. And I just don't think it's necessary. If that's okay, I appreciate it. That's
an advanced student question right there. You know, he loves the topic.
Now can I go one more, make another point if I could?
Yeah.
Here in the trifecta, everybody sit back for a minute. I've thrown out a lot. Let's just dissect it, just big picture. And I want to zoom in on this SCorp for another minute. Big picture, we're going to put our assets over here. Could be cash or real estate. I want my life insurance, investment accounts, and home to go into a trust so I avoid probate and have a plan. Start with a will for now. This is why it's a trifecta. The trust work or your estate plan is the base. The LLCs is holding assets over here. And then we've got this operational side. And I already threw out, well, let's set up an SCorp. Well, the SCorp is only, like you said, Hone, when we start making 40 or 50 grand net. Now, some of you say, well, what's the big deal? So I got a sweet little slide here. If you're a sole proprietorship, and let's say you bring in 250 grand, maybe you flipped some homes, you've got some online business or whatever. And I know there's someone watching this that has made more than 50 grand. Now I'm just using this example. It's just kind of a round number. It's easy. 250 grand, 50 grand in expenses. We wrote off everything under the sun. And look, you netted 200. Well, you're going to pay FICA tax of close to $20,000. That's FICA, the F word, Social Security and Medicare. Then you're going to pay your federal and state tax on top of that. A C corporation sucks because now I've got to pay corporate tax, which is 21%. And that was in 2019 and the same in 2020. So now I'm paying corporate tax out the rear end, and I've got to pay personal, fed, and state. And I literally had a phone call with a client yesterday from California, and someone was talking to them about trying to set up a C corporation in Wyoming. It would have been a disaster. We had to talk them off the cliff. Here's why the S Corp is pretty sexy. Same income, same expenses. But this 200 grand you make, we split it. I take 70 grand and pay my FICA, my fair share, so I don't get audited. There's $10,000 in FICA. The rest passed through with no corporate tax, no FICA, no Obamacare. So I saved almost 10 grand versus a sole proprietor. I saved 27 grand compared to a C Corp. And I get a 20% deduction under the new Tax Cuts and Jobs Act on the net. So I get to write off another 26 grand. These S Corps are freaking amazing. And so I want to summarize with this. Every dentist, doctor, engineer, lawyer, accountant, broker, realtor, plumber, electrician, landscaper, online seller, they're S Corps. They just are. And it saves so much. And this diagram.
Can you hit the play button? Can you hit the play button on your slideshow there so that it could get magnified? One of the viewers are asking, they're watching from their cell phone, and so they're saying that it's a little small. So
you bet. Once I magnify it, I don't mind magnifying, then I can't type on it.
Yeah.
So as I've been kind of typing, I jump back and forth. But so we could go back and forth. Here's the trifecta. Here's what the S Corp's good about is this elimination of corporate tax, Obamacare. It reduces your audit. You know, people, I'm getting my clients 15 times less chance of an audit. 1,500% due to statistics. I can save you from getting audited by doing this. So I'm saving you money, getting you protection, possibly privacy, and it's a less chance of an audit. And you're going, hold it, why is my accountant not talking about it? Do you know I teach more classes to CPAs around the country than to real estate or small business owners?
That's awesome.
And so people, you're learning high level stuff. I have a little matrix of how much your payroll should be based on how much you make. And we just start to have fun. We talked about the asset protection. Anyway, so I can keep going. Hon, what do you want me to focus on now? Because it's so much.
We have a question real quick from Paris. Paris says, my C.P.A. who graduated from Wharton and has a law degree from Georgetown in taxation keeps telling me that she needs to set up an LP for her investment properties, but I beg to differ. Can you break down a little benefits?
Oh, very good. Okay, let me see here if I've got a good slide to identify.
So I guess really it's LP versus LLC.
Yeah. Okay. Now, my person that's watching on a phone, I'm sorry, we're going to have to hijack. You're going to have to watch me play on my screen here. So be patient. I'm going to create a new slide here. Now, I have a slide and some other presentations on this. This is a little high level. It's not as high level as a charitable remainder trust. So everybody chill out, be patient. Okay, so we're going to do this. We're going to get rid of that. This is going to be good. We're going to compare LP to LLC. And yes. I know exactly what your attorney is talking about. And by the way, I've had attorneys and CPAs that have gotten Ivy League education and come to my workshop and they're like, oh my gosh, Mark, I learned more in a day with you than I did in my entire education. I'm not kidding. And that in business school, in their master's at Harvard. And I had another one that one even did a thing over at Oxford in England. Okay, now this is your LLC. And so we're going to compare the two. And then we're going to drop over here. We're going to put an LP. Now let me explain everybody what this little LP thing is about. We're going to need this little buddy here. So you're going to like that. Believe it or not, this comes into play. Okay, so this is what's called a limited partnership. And this is good for everybody to hear, because you're going to get sold this sometimes, and you want to be able to say, oh, I remember Hone's podcast on this or webinar. Let's go look at it. Now let's get rid of this special life insurance over here. Now you own 100% of this LLC. Now this is good, everybody. You've got your rentals here, your rentals here. So let's assume apples to apples. We own the same rentals in two different types of entities. We'll call this our limited partnership. Let's give it a different color, and maybe actually orange. And then we've got our LLC that's green. Now with the limited partnership, think about it. There's limited partners because it's a limited partnership. So, so who's going to be the limited partner? So usually you can blow away your Wharton educated buddy and say, okay, so the limited partner is going to be my trust or myself, and that's the limited partner. And the limited partner is protected from any possible lawsuit. The asset protection is pretty sweet. It's pretty good. But who's liable in a limited partnership?
General partner.
That's right. Oh, good job. It is the general partner. Well, who are we going to make the general partner? Once in a while, I'll see an attorney make the same person the limited partner and the general partner, which is a disaster. So because now, yeah, you're personally liable. The limited partnership did nothing. So usually what we do is we set up a 1% general partner. Now the person watching is probably like, yeah, I remember him talking about this. So we're going to have a 1% general partner. Now, usually we'll make that a single member LLC, or if you have an SCorp, we're just going to make your SCorp the general partner. It's a shell. And this is why, back to Jen, we never put assets in our SCorp. It's a shell. So it can get sued. All you can have is my cell phone and laptop. It's done. Okay, now here's the good. I'll give you the good first. All right, everybody, this is a good example. You're driving down the road. You're texting and driving. You know you shouldn't, but it's important. It's your boyfriend or girlfriend, your husband or wife, and you're going to text and drive. You blow through a crosswalk and kill a family of 5. Who knows? Terrible. It happens all the time. And do you know people? They're being prosecuted now as involuntary manslaughter, as if drunk driving. There's people going to jail for texting and driving and causing accidents. It is scary. But let's just say what's going to happen next? A lawsuit, and they're going to sue you. Now, can they get into your LLC and take away your rentals? You say, no, Mark, I set up an LLC to protect the rentals. No, 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 no. You set up an LLC to protect you from the rentals. You didn't want to get sued by the tenants. So we set up an LLC. Well, I thought I was protecting the rental. No, you're protecting you from the rental. Oh my gosh. Well, can they get in that LLC? In about 37 states, they can. They can get into the LLC and take away your rental to satisfy a personal debt. Now, this is stuff in my book. This is chapters of my book, and I have a table of all you get this at Amazon for $20, whatever. And I've got a table of all the states that are like this. But there's 13 states that give you two-way protection, where you're protected from that rental and the rental's protected from you being an idiot. Now, in almost all 50 states, a limited partnership protects the limited partner, and it protects the rental from the limited partner being an idiot. So you're going to say, okay, hold it, Mark. In 13 states, I get the LLC acts like a limited partner. But in these other 37 states, limited partnerships are better asset protection. Sure, I'll give you that. That's right. Well, Mark, why aren't you talking about limited partnerships? Because my little buddy at Wharton, he went to an Ivy League school, and he obviously knows more than you. I went to law school, I got a C.P.A, and I train other CPAs and lawyers around the country. Here's the difference. When you go to do your tax return, and if you've got depreciation and mortgage interest and tax write-offs, they are up to 100% deductible, depending on your situation, your income, and how we've structured you. But I can oftentimes get 100% deduction for all the pass-through losses from your rental, even though it's cash flowing, in all 50 states, if it's an LLC. I can't do it at all. Zero in a limited partnership. Limited partnerships are terrible for pass-through losses because by definition, they're passive losses. So they're never ordinarily deductible. where I can get some deduction over here, if not 100%, I can do 0 over here. So you can go to your Wharton buddy and say, yes, I agree with you. In most states, the limited partnership, depending on the state, you're going to get my book and have the table right there. The limited partnership would be better for asset protection, but it's a nightmare for tax planning. And that's the difference. So here's the takeaway. What do I put in limited partnerships? I put assets that don't create rental losses. Beach houses, cabins, farms, cash, cryptocurrency, whatever.
Okay.
That's the difference.
Could you increase, or how would you increase the asset protection from you in the LLC situation? Whereas the LP protects, right? How do you protect?
Okay. So you're saying, Mark, I want my cake and eat it too. I want both of them. All right. Well, let's go back to the slide you all saw. Option 4 gets us pass-through losses and the same or better protection from the limited partnership scenario, because now I've got 2 layers of LLCs, and I can hide you with a Wyoming LLC or Utah, New Mexico, and a few other states. I can set up an LLC, give you complete 2-way protection, have a second layer of protection, better than a limited partnership, and make sure you get all your losses in most instances. Again, there's some variables. And you'd say, well, Mark, awesome, right? Well, Mark, why don't you set everybody as a number 4? Because everybody's not there yet. And there are groups out there, and I don't want to say their name on a recorded conversation like this, that sell this bullshit to everybody. Do you know how many people call me up and go, Mark, I spent $7 grand at a workshop in Vegas, and I've got 3 LLCs in my COPE entity in Wyoming. And I go, that's great. Tell me about all your rentals then. Oh, well, I just have one. How much is it worth? 180 grand, and I put down 20%. So I've got about, 60 grand of equity. Okay. You just got scammed because a bullshit attorney from Wharton decided to oversell you on crap you didn't need. Now, whoever asked that question, if you call me up and go, Mark, I want all that protection, I'm going to say, how many rentals do you have? How much is your net worth? How many states are you doing business in? Because you're going to get an answer from us where when you go back out there onto a podcast like Hones, you're going to go, you know what? Mark's firm did me right. They didn't take advantage of me, because we want you coming back year after year for company maintenance, your minutes, mail forwarding, your estate plan, new entities, tax planning. And if we rip you off on the front end, you're never going to come back. Oh, there you go, baby. Boom.
I love when you get all into it like that. Chris, the LP sounded very tempting until he mentioned the deductions. Absolutely.
Yeah. Now, again, I'll say this. If you were talking about an LP from a second home that you never rent out, sure. You better have a general partnership to go. So now you have 2 entities, but I'm all good. I see a farm right out my window here. I'm up in Idaho. I see a farm out there. I know they're a limited partnership. Consulted with the farmer, 15,000 acres, limited partnership, but he doesn't have rental depreciation losses. So I got better protection for that farm in an LP. It depends on the asset. It depends what you're worth. It depends where you live. Gotta be careful. That's why you can't go on freaking the web and go, bing, bing, bing. This is what everybody says is good. Your situation may be different. Set up an effing consult and get it done right. So I get all fired up, Hone.
I love it. That's why I follow you.
Thanks,
you make taxes fun.
Oh man, I hope so. I want to save you money.
Yeah.
All right. Any other good questions out there? What's our chat line look like?
Yeah, the chat line. Well, let's see. So there was an interesting one from Damien. He said, how is there no asset protection when buying a property in a trust? For example, my last property I bought in a trust, I'm a trustee and my LLC is the beneficiary. The trust has a Philly business license and EIN number.
Okay. All right. Notice what he said. What's his first name?
Damien.
Damien. Okay. Notice what Damien said. He goes, how is my trust not giving me asset protection? Okay, let's go to our trifecta. Let's have fun with this situation. Now, he said, what Damien's referring to is he said, I have a trust and the beneficiary is the LLC.
Correct.
Huh. That's weird. In this situation, the owner of the LLC is the trust. Huh. I wonder what Damien's talking about. Well, I know what he's talking about. Damien is talking about a land trust. So someone has sold him on a land trust structure.
Yep.
All right. That's not a revocable living trust, Damien. So what Damien here, and I set these up. If you want one, I'll tell you the good, bad, and ugly right now. So what Damien has is he's got this cute little land trust up here. And a lot of people name it this name on the street. So it's going to be 123 Main Street Trust, you know, some bullshit like that. Fine. Okay, so it's a land trust, and he's the trustee. Let's give it a different color because it's a different type of trust. Let's make it yellow. Okay, so we've got this little cute little land trust. That's nice, Damien. That's great. You're right. The trust has no protection. Where is Damien getting his protection? He said something very interesting. I've got a land trust, and the beneficiary is, okay, just a second. I've got to tell. Hey, Matt, I'm doing a live webinar, and I did not schedule a live podcast for noon so we can record it. I'll get off this webinar and call you in about 10. Thanks, bud. That was my business partner. We got a live radio show we usually do in 10 minutes. Okay. Yeah, that's Matt Sorensen. Okay, now, Damien, I'm not saying what you've done is bad, and I'm not saying what you said is wrong. I just want you to understand what you have. He said, I have a land trust where the beneficiary is the LLC. So this is good. So let's use the right terms here. He's got a beneficiary right here, beneficiary. Now for you on a phone, I'll make this big in just a moment. Beneficiary, and who's the trustee? Oh, well, the trustee is Damien. So let's put Damien up here. Damien, D-A-M-I-E-N. I hope I got that right, Damien. Please forgive me. Okay, so the trustee is Damien, the beneficiary is the LLC. Well, of course you have protection. I'll ask Hone, where's the protection, Hone?
The LLC being the beneficiary is the protection.
That's where the protection is. And so you're going, well, okay, so the LLC is giving me the protection. The trust has an ID number. Fine. The trust has a name and a bank account. Fine. But if it is a revocable land trust, which most of them are you filing a tax return for this? No, it's a pass-through trust. There's no tax return on the land trust. So why in the hell would Damien do a land trust? For the word starts with a P. What do you think? Oh, and I'm going to test you. Why would Damien do this? Starts with a P. Privacy. That's right. He doesn't want his LLC's name out on the title of this property. He wants it private. That's cool. Land trusts are great for that. You may even do a subject to sale of the property. Fine. I can play around with the trust. But the revocable land trust, and I write this in every one of my books, Damien, I stand behind it, and this is 100% accurate, God-awful truth, God-honest truth. There is no protection with a revocable land trust. You're the trustee, the LLC is the beneficiary, and that, my friend, is where your protection is. So you're good. You got protection and privacy. Boom, bada bang. We set up land trusts for $400. You want one? Great. I'll set it up for you. Do I have them on my properties? Nope. I don't care. I use my LLC in a unique way where I don't need the freaking land trust. So it's up to you. And I have clients that are all hot and bothered because some workshop or some bozo selling land trusts like their next best thing to sliced bread. And I'm not saying they're bad, but they oversell them with bullshit they don't do. Now, last point. Someone may have sold Damien an irrevocable land trust. Whew. Now, irrevocable trusts are, let me guess, irrevocable. You can't change them. And normally, you're not going to be the trustee of an irrevocable trust because if you control it or own it, a creditor can get it. So these nut jobs out there will set up irrevocable trusts. And they're great. And once in a while, I set them up for clients that are worth millions. And we're going to carve out $1 million property in an irrevocable trust for the next generation or something. Sure. But not for the bread and butter rentals that you've got, Damien. You want control. You want to be able to sell it. You want to be able to go to fix it. You want privacy and you want protection. That structure is great the way you have it. But just realize the protection is not coming from your trust. The privacy is coming from your trust.
Love it. Love it. So now with your revocable living trust that you have right there in that diagram, you're going to be paying it. So you have a strategy where you can pay your kids, right? So you're going to be paying your kids $12,000 a year or less, right? Less than the standard deduction. And the payment will come from that revocable living trust, correct?
No.
Oh, it'll
You're gonna
come
love
from your
this.
C.P.A, which is your
Okay.
family management company, which is set up on the side, correct? That's what
Yep.
it is.
So we're gonna do this. In fact, let me grab this little structure here, so we can put this up here. You guys are gonna love it. We'll probably finish with this slide, and this will be good. So this is kid
the
under.
one that applies to a lot of people, being able to pay their kids and reduce their income.
Yep, this is a chapter in my book. We talk about it all the time. Okay, so people, you can see the diagram. Where we would be is the rental property would be up here on the top right. We just had an example like that. And down here, look at this. We've got, here's our revocable living trust in 1040. Now, this is how I do this. Everybody pay attention. If you are a sole proprietorship or LLC, you can put your kids on payroll with no W-2, no 1099. It's totally legal. And any child under 18, so that's 17 or younger, you can do a payment of up to $12,400 in 2020. Again, I just pulled this slideshow up real quick. So, and that's $12,400 in 2020. Now, I'm not going to pay a 6-year-old $12,400, but I might pay a 16 or 17-year-old. Now, if you have an SCorp, you funnel it through a family management company, and that's where we get a better bang for our buck without FICA and without self-employment tax. So SCorp owners cannot pay kids directly out of their SCorp. That's why there's an X on it. Now, if you have rental property, we can pay the kids directly out of here. Now, this is kids under age 18, but I'm not satisfied with this. I want to take it to the next level. Bam. So what we're going to do is pay the kids so they can fund a Roth IRA. And then my kid's Roth IRA is going to be a partner in my next LLC. So I can build tax-free wealth for my kids for college and retirement for me and everybody with this long-term plan. So I've got LLCs, I've got my future retirement account LLCs, I've got my own LLCs for rentals, I'm paying my kids out of a sole prop. This is all in my books. I've got videos that again, we can jump over. If some of you want to just kind of dive a little deeper on this, and Hone, I'll just take just a second. If you type Kohler, pay kids, you can get over there and watch a quick little video, putting your kids on payroll, 22,000 views, paying your kids over age 18, a Roth IRA for your kids. Here's me on a live stage. So this is really, really good. I think you'd love it. So check it out.
Yeah, and your website, markjkohler.com, correct?
Yes, sir. markjkohler.com. And everybody, if you get over there, you can sign up for my free ebook, and I get on my email list. And oh, geez, www.mark. You think I could spell my own website, right? So here's markjkohler.com. Sign up for the newsletter. It's free, and I have the 10 best tax saving secrets ebook for free. I've got a quarantine special right now. Here's more info about me. Anyway, there you go, Hone. Sorry.
No, this is fantastic. Just real quick, the money that pays the kids, you said it can come from an LLC as well. It can come from the LLC to the kids. Is that right?
Yeah. So if you've got your operational business as an LLC for now, and you haven't converted to the SCorp, we'll just pay the kids out of there. Oh, okay. I got an LLC with rental property. Okay, we'll pay the kids out of there. But once you get an SCorp, you can't pay kids directly out of there unless they're over age 18. So then we're going to spit off the money into the sole prop.
Got it. And then you open up a bank account for the kids?
Oh, yeah. Every kid needs to have their own bank account, their own debit account, a debit card. I want the kids filing tax returns. I'm right here. This is funny. I'm working on one of my kids' tax returns this morning. They all have credit scores of over 700. They all have their own tax returns. They're all getting the stimulus check. They're all buying rental properties. You can start passing on a legacy to your kids.
And kids don't have an issue with starting that bank account or anything like that, right? I guess maybe you have to co-sign or something.
If the kids are under age 12, most of the banks are going to set up teen checkings accounts around age 11 or 12. But if you go into a bank and you want to set up a bank account with a debit card for a kid under 11 or 12, if they give you crap, just open a joint account. Open a joint account, put them on there as a signer with you, and give them a debit card in their name. And then that's their bank account, and that's where you're going to push the money. If you're going to launder money, you got to have an account for it.
Yeah.
That was a joke.
Mark, this was a fantastic meeting. I know you have your next thing with Matt. I don't want to hold you too long, so thank you so much.
Awesome.
How do people get in contact with you? Just go on your website there?
Yeah, and when you're at my website, I won't share my screen again, but if you get over to markjkohler.com, when you sign up for the ebook and the newsletter, it says, would you like a phone call with an attorney? And in a full hour, just like that, we had an hour together here. If I would have been with Hone, I would have built his diagram for him, for his structure, and talked about his tax planning for this year in 1 hour. And then it includes setting up that entity. So that's the $800. Very, very affordable with a real tax attorney in any state in the country. So just click on the box and say, I want to call, I want to consult, let's do it, you know.
Love it. Awesome, Mark. I mean, you've just delivered so much value to a whole bunch of people. You had a lot of fans on here of yours. So it's good.
Thank you.
It's good for them to see you. But then I think you made a fan out of a whole bunch of people who don't know you yet. So that's awesome.
Sorry if I was a little offensive getting excited, but just want to look out for you guys. I don't want to, if you go out there and look for dirt on Mark Kohler, I hope you don't find any, and let me know if you do, because I want to correct any problem I've had with anyone. So. No,
you're a solid guy, Mark. So thank you so much for hopping on this, and I hope you have a great next call.
Okay, thank you. All right, we'll talk to you later.
See you, Mark.
See you. Thanks. Bye.